a huge world. Buy some other stock.
Today, I'm going to share with you 7 reasons to never buy Palantir stock. Number 1. Long sales cycle. As Palantir doesn't have a ready-to-use solution, they customize their software to each client according to their needs, a process that can take from a couple of months to over a year, making it costly and hard to scale. They even have to keep engineers working with the customers after the software is ready, in order to teach them how to use it properly. Palantir's software is very expensive. Their contracts start at $1 million, being a lot more than $10 million in some cases, which makes the TAM, total addressable market, pretty small since only huge companies can afford it. Overpromising and slowing growth. Since becoming public, Palantir has been overpromising and underdelivering. In February 2022, they projected an annual revenue growth of 30% or greater through 2025. We are in the first year of this projection and they are already about to miss. After slightly beating in Q1 with a 31% growth, they missed big in Q2 with a 26% and even bigger now in Q3, growing only 22%, which is nothing extraordinary. Most unprofitable tech companies with high valuations like Palantir are growing faster. Unprofitable. Palantir was founded in 2003 and had huge government contracts throwing millions of dollars every year into the operation. Now, about 20 years later, they are still not able to make profits, and they don't plan to make it anytime soon. Management is now saying they should achieve positive earnings in 2025. 3 years from now, what might happen, or they are just overpromising once again. Let's see how Karp used to address this matter.
We're in this for the long haul. If you are speculating or you are, or you're thinking about the short term, there are plenty of other things to invest in. We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs. My lawyers won't let me say more than that, but it's obvious. And if you want something else, it's a huge world. Buy some other stock. You don't have to buy Palantir. No one's forcing you. We're completely liquid. Do something else.
I love the fact they are focused on the long haul, but every business needs to generate profits at some point. It's a fair concern for investors to have. Karp, as the CEO of a public company, should have a plan and address it with respect, not tell shareholders to go buy other stock. I mean, he is literally mocking his potential and current investors while saying he doesn't need them. They show some ridiculous tables with adjusted gross profit, adjusted operating margins, adjusted net income. Oh my gosh, as an accountant and former auditor, I feel kind of sick looking at this report. Whenever you read or hear the word adjusted in financial statements, think shit. Which takes us to the next point. Stock-based compensation. The only reason they have all these great adjusted numbers is because of the massive stock-based compensation they do, which is a very real expense that hurts investors. Instead of paying managers and executives with money, they pay themselves with stock, which dilutes the Karp out of shareholders. And although it looks like they are finally reducing the size of this problem, the expense went down in 2022 because the shares worth less now. In terms of percent dilution, 2022 is pretty similar to 2021. In 2020, they basically doubled the number of shares issued, an insane 95% increase, followed by a 10% increase in 2021 and 8% so far this year, which will probably end up being another big 10%. This situation made Karp the highest paid CEO in the world in 2020. Making $1.1 billion, slightly higher than the company's entire sales for the year. In 2021, he lost the top place to Musk, but still figured in the top 10 list of best paid CEOs, making $264 million. Let's be frank here, their company's performance over this period was average at best. Why is he making billions of dollars? Here is Karp explaining why they went public.
And we believe being in the public space will help us with our clients and help us grow. And quite frankly, I believe the people at Palantir who've built this company over 17 years deserved access to liquidity.
There it is. They went public because they wanted to get paid big time, and as the company doesn't make money, they decided to pocket it from investors. Competition. Palantir manages complex data, processing multiple points of it and showing it in a nice interactive way so companies can get faster and smarter information to make better decisions. Sounds great! But you know who else is in the data processing business? You got Snowflake, Microsoft with Azure, Google with its cloud services, Amazon with AWS, Oracle, IBM Cloud, SAP, and more. To be honest, besides being an extremely expensive customized solution, I have no idea what else differentiates Palantir, and I think most people don't as well. The only two arguments I hear is that they work with governments, making them safer, and that they've been building their software for 20 years, therefore they are years ahead of the competition. While these arguments can be true, to me they sound like Karp's regular BS interviews and random opinions from people who never use their product nor their competitors. If they are so much better, why do most of their competitors grow faster? High valuation. Even though their stock price went down 84% from all-time highs, I still think it's overvalued. As they don't make profits and their cash flow doesn't reflect the company's reality, I'll use price to sales to make comparisons here. Not the best metric, but the only real one they have. Their price to sales is 9, growing around 25% rate per year. I just did videos on Airbnb and Tesla, both profitable companies growing way more than 25% per year, and their prices to sales are 8 and 9, respectively. There are also better small and profitable tech companies with better metrics, such as Duolingo, growing over 50% per year, with a price to sales of 10. I know revenue growth rate is not the only factor that impacts valuation, but every other one I look at, things get worse for Palantir. Especially in today's market, where you have companies like Meta, Google, Tesla, Amazon all trading at multi-year lows. Why would you risk your money in Palantir stock?